Okay, the REIT, the Real Estate Investment Trust, is an asset class which gives the members of the public and institutional investors the opportunity to invest indirectly in assets which otherwise they would not have been able to do on their own. So what we have done as UPDC, as you know, we are real estate developers, and we've been in this business for a long time. What we've done is to put together 5 of our assets. And based on those assets, we're floating a REIT of 30 billion, but we're actually selling only 60% to the public because we're keeping 40% of the value of the REIT. And the reason why we're keeping 40% is very simple. We also need to show that our interest is significantly aligned with that of the other investors in the REIT. And they will have the assurance that we're going to work together to ensure that the value of the REIT is enhanced going into the future.
Sir, what is the drive behind this?
Well, for us as a real estate developer, this gives us the opportunity to unlock value in our assets very quickly and put capital in our hands to aggressively follow our existing projects. That's on our side, and that also helps us to create and enhance the value that we create for our shareholders. But also, REITs normally help to deepen the real estate market in any country. So what this also does is that it gives the investing public the opportunity to be part owners of assets which on their own they will not have been able to do. You know, so we have 5 assets in Ikoyi, in VI, in Abuja, and in Aba. You know, so any member of the public who can raise 100,000, which is the minimum subscription, can buy into those properties, and then you become a part owner of those assets. And when distributions are made, you are also paid based on your proportionate holding in those assets. So that's what the REIT does for any economy.
What is the floating rate actually?
Pardon me?
What is the floating rate?
It's floated at 10 naira. It's 30 billion divided into 3 billion units of 10 naira issued at par.
Okay, and what's the coupon on this as well?
Well, you can't talk of coupon rate in the case of a REIT because this is not a bond as such. But you can talk of the yield of the REIT. Over a period of 5 years, what is projected for this REIT is an average of about 11.7%, and which we think is quite respectable for a real estate asset class. One of the key features of a REIT is that it gives you access to regular and stable distributions. And the offer that we have in market is quite different from those offers that you are referring to. This is a REIT based on existing assets. So the assets have been built. So it's not as if we have come to the market, we are raising money to start building those properties. Those assets are there. Those assets are already existing. They have a rental history. They are fully tenanted. So if you want to do your due diligence, you could go to the agent houses and inspect the documents. You could physically visit those assets. You know, so for this REIT, the earnings are certain unless something very catastrophic occurs and those buildings are blown away, which is not very likely. Those assets are already there. They already have tenants. They have income. As a matter of fact, for some of those assets, rentals have been paid in advance. So at the cut-off date, UPDC will have to refund rent to the REIT. You know, so we say that one of the benefits of this REIT is access to immediate income. Immediate income, instant cash back are the features of this REIT. You know, and we've designed this REIT as such also because we need to gain the confidence of the market. You know, and you'll see that if you look at our prospectus, we've stated the assets, we've shown the pictures, we've shown the rental history, we've shown the current values, we've shown the valuation. The valuation was done by Jide Taiwo and Joe Aigbe. We've discounted the value to ensure that we make the yields a lot more attractive. So this is very different from those offers because for this REIT, you can hardly go wrong. You know, because the earnings are certain, the yield is certain, distributions are certain, and we have put together an investment committee, very broad-based investment committee, with UPDC in the minority. We only have 2 members of the 9-member committee, also to ensure that, you know, UPDC does not have undue influence on the investment committee. You know, so I think that with those structures that we have put in place, we have been able to design a vehicle, an investment vehicle, which should assure investors that if they put in their money, they are sure that their returns will come.